Patrick DeHaan joins us, the GasMoney.com head of petroleum analysis. So, Patrick, what do you see? I know when we had that downdraft in prices, we fell by about 20 or more cents a gallon, depending on where you live. You had said, don't get used to it. A lot of people were getting used to it. That's evaporated. What's happening?
Yeah, Neil, I think a lot of what we're seeing in the price of oil right now is having to do with the EU potentially sanctioning Russia's oil. That certainly will widen the imbalance between supply and demand. And of course, China continuing to lock down Shanghai and Beijing with COVID flaring up. So we have two issues really on opposite sides of the spectrum. Oil markets so far this week plunging, obviously economic concerns, China shutting down its economy. But what's powering gas prices right now is what WTI did last week, rising $9 a barrel. So we'll see the increase probably continue for another few days. But I think the increase could then fizzle out, especially if today's drop for the second straight day in WTI can hold on.
You know what's kind of interesting about this, though, Patrick, is the Americans' willingness to absorb these body blows and still take their trip. I get it. They want to get out. They're sick of being shut in. This is their first summer to do that after a couple of brutal ones. So I get that. So that might keep these prices up, ironically, that very demand, right?
Yeah, absolutely, Neil. There's a lot of pent-up demand, as you mentioned. This is going to be the best summer since 2019 to get out and about. The economy's broadly reopened. COVID, at least for now, cases are still very low, and Americans want to get out. And we're just starting to see warm weather heat up. Demand is still very strong against a backdrop of supply that's been shrinking. And you look at gasoline and diesel or distillate inventories, Neil, and it's not a pretty picture. Not only that, but U.S. refining capacity is down 1 million barrels a day compared to 2019. So there's a heck of a lot of kinks potentially in the supply chain for oil this summer. It may not be a pretty one.
Pat, I'd be curious your take on the president pointing the finger at the oil industry itself, that these guys are making record profits. He says it's obscene. There's got to be something we can do. Others, like Bernie Sanders, have talked about a windfall profits tax to sort of share the loot that they're making. What do you think of all this?
Well, Neil, oil companies are price takers. I know everyone thinks that oil companies get to arbitrarily just charge whatever they want. You point out, well, then why wouldn't oil companies charge $300 a barrel? But the fact of the matter is, oil companies lose billions. They do really well. They make billions when prices are high. Americans, we continue to fill up. Part of it is my own fault that, I still want to get out and about. But, Neil, at the end of the day, you look at it, this was a banner quarter for oil companies, BP, Shell, ExxonMobil, Total. You combine those four oil companies and their blockbuster first quarter, it's still not as much profit as Apple's making. So are we really, do we have any room to go after the oil companies when profit? I mean, we're in a capitalist society.
Yeah, I don't see anyone going back, against Apple saying, turn over that iPhone and iPad revenue. You mentioned a good point. But, Patrick, I'm just wondering if there's a breaking point for consumers, a capitulation in energy, if you will. We still haven't seen it in stocks, although we could be getting close. But is there a level at which even those who are hungry to take a vacation say, no mas, I can't deal with this? How close are we to that? What would get us closer to a point at the pump where we say, this is ridiculous?
Neil, I think most of us, we talk a big game, $4 a gallon. We all hate it. Nobody likes to pay $4 a gallon. But $4 a gallon isn't that resistance point where I'm going, oh, man, I've got to stop driving. I think that resistance point for most Americans is going to be that $5 mark, right? We've seen $4 around for the last month and a half. Nobody's really curtailing driving, maybe a small percentage of Americans. It's really going to take that first digit, that psychological first digit. You're going to see it. It's going to be that $5 a gallon mark in most of the U.S., and it's going to be $6 for California.
Yeah, and you talk about it, too. I know they say in places like France, it's the equivalent of $12 a gallon. And a lot of Americans who don't like the French say, yeah, but you're in France. So back and forth we go on this. But it's a lot worse elsewhere, isn't it?
Yeah, absolutely. You look to Europe where they have other forms of transit that are options.
Right.
France, bullet trains, high-speed trains. The difference is that the U.S. doesn't have that. I mean, Germany is about the same size as Montana. So, I mean, if the U.S. was as small, we'd probably have a really efficient network, too. The problem is we don't. We rely on the automobile and affordable energy, and we don't have any of it right now. Energy remains very expensive.
Sorry to jump on you there, Pat. I just wanted to get your sense then. Could the escalation in prices eventually lead to a reversal in prices, that you hit a point of resistance that OPEC didn't envision in the early 70s or again in the late 70s when it shut down the globe. I hope that doesn't happen here. But is there a point where you get where all of a sudden OPEC realizes, we kind of forced this over the edge?
Absolutely. OPEC's mission is not to charge obscene amount for oil, right, Neil? It's to keep Americans addicted to oil.
Right.
And we're beyond the point right now. I mean, OPEC dragged its feet, only starting to raise production in July in 2021. That was obviously way too late.
And grudgingly so.
Exactly. And now we're well beyond that point where Tesla can't keep EVs in stock because more Americans are making that jump. So if OPEC wants to do something and keep Americans relying on fossil fuels, they better ramp up production and quickly. Otherwise, they'll become irrelevant when Americans start making that trend.
Yeah, they're shooting themselves in the proverbial foot. Patrick, always good talking to you. Patrick DeHaan, the GasBuddy.com head of petroleum analysis, and an uncanny read of what's been happening at the pump.